ETFs, ETFs, ETFs. These three letters have become a norm after Zerodha Fundos has come into existence. Hashtag era of passive. So in this video, let's get down into the breakdown of what are ETFs, what are the types of ETFs, and my favorite ETFs. Hi friends, Lakshmi Narayanan here. Let's get into the video. So what is this ETF? ETF stands for Exchange Traded Fund, and these instruments are similar like mutual funds. So these ETFs are listed in stock exchanges and they enable investors to buy and sell during market hours. So one of the most important benefit is that the cutoff timing related to investments in mutual fund is dramatically reduced after the advent of these exchange traded fund. So let's get into the types of ETFs. So the types of ETFs can be categorized majorly under 5 categories. Number 1, equity ETFs. Number 2, liquid ETFs. Number 3, commodity ETFs. Number 4, bond ETFs. And number 5, other types of ETFs. So let's break down one by one. So firstly, when we take equity ETFs, here the underlying assets are majorly the listed stocks in public domain. This may include from the big names of Reliance, Infosys, etc. But they majorly have an underlying assets mirroring a benchmark index. That is to say, it may be like Nifty 50 or BSE Sensex index, some kind of the construction. Number 2, let's see the liquid ETFs. So the liquid ETFs are ETFs which cater to short-term needs of investor. So one of the popular ETFs here is Nippon Liquid Bees. This has been best performing ETFs for the past years, where people try to manage the short-term funds, or corporates try to manage the short-term funds by investing in these types of instruments. So the next type of ETFs are commodity ETFs. The commodity ETFs can be varying from like gold, silver to copper, etc. And here the major advantage is that they reduce the cost and risk associated with storing these commodities physically. That's the only major advantage. And I also have the GST buying and selling. Here it is kind of that small making charges and things like that have been reduced here. So fourth is the bond ETFs. As the name suggests, the underlying here is also similar kind of bonds which are being issued by corporate and municipal bonds, state government bonds, etc. Here they try to mimic some kind of CRISIL indexes or other benchmarks which are the norm in the industry. So the final type of ETFs is other types. So other types includes international ETFs like Motilal Oswal Nasdaq ETFs, which follows the Nasdaq index, and there are something called as inverse ETFs, which kind of mimics the direction which is opposite to the market, and you also have something called active ETFs, which has been actively managed by the fund managers. So that is the major summary of the types of ETFs. Now let's get into why investors use these ETFs. So why, the question when it comes, the majorly 3 answers for this. So firstly, for passive income purposes. Secondly, for portfolio diversification. And third, the major point is that for parking and extra cash. So these are like the major reasons why the investors use these type of instruments. So finally, what are my favorite ETFs in the market? So my favorite ETFs are these 2 ETFs. Motilal Oswal Nasdaq 100 ETFs, which kind of mimics the Nasdaq 100 index. So here This scheme has been returning around 22.89%. So this is kind of a very good scheme. And ICICI Prudential Nifty 50 value 20 ETFs. So here this ETF has been returning 18.9% against the benchmark, which is 16.57. So here the return has been phenomenal over the years. You should definitely check these two funds out in case if you are planning to get into the ETFs. That's it from my side, guys. Thanks for watching. We'll catch you up in the next video. Peace.